So what's harder to predict? The South African Reserve Bank and the Fed's next move, or when Eskom will finally fix the electricity crisis? Well, neither that, but at least with the markets, we've got some clues. So before you place your next trade, watch this. Hi everyone, Francois here, your market analyst at ATFX Africa. Welcome back to your daily market brief, where we'll tackle what drives these markets fundamentally, map out the key technical levels, and of course, keep things sharp with a touch of humor. Kicking things off today with USD ZAR. The Rand has been hovering around 17 Rand 40 cents to the dollar, and here's why. Let's start off with the US Federal Reserve, who has officially started its easing cycle with a 25 basis point rate cut announced last night, taking the target range to 4 to 4.25%. That's the first rate cut since December 2024. More cuts are penciled in for this year, and the Fed tries to support a softening labor market. But it wasn't unanimous. Newly appointed Governor Stephen Moran wanted a 50 basis point cut, a reminder that division within the Fed could lead to bigger swings in the dollar's outlook. Then Powell's message was clear as well in his speech afterwards, where he stated that inflation risk remains tilted upward, while employment risk leans downward. Translation? Well, the Fed is walking a tightrope. Let's just put it that way. Trying not to let rising unemployment undo the economy, while still wrestling inflation back down to 2%. Then if we have a look back home, South Africa's August inflation cooled to 3.3%, comfortably within the South African Reserve Bank's 3 to 6% range, and even brushing against their new 3% target. That has raised expectations for a rate cut. But timing is tricky. With inflation likely to drift slightly higher towards year end, the MPC might prefer patience. They don't want to cut now and then be forced into an awkward U-turn later this year. Additionally, softer precious metal prices also sap some of the Rand's shine. Gold, platinum, and palladium are critical export earners. When those prices dip, the Rand tends to follow. So what we've got is a cross current. Fed cuts weaken the dollar, South African Reserve Bank indecision caps Rand strength, and metals keep acting as a headwind. Having a look at the charts, USD ZAR sits at around 17 Rand 44 at the moment. Support levels come in at 17.27 and then 17.15, while resistance lies at 17.45 and 17.70. For now, the chart is like a rope in a tug of war, pulled in both directions without a clear breakout.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Moving things over to cryptocurrencies, kicking things off with Ethereum, which is holding around $4,600, up almost 14% in the past month and a staggering 87% in the past year. But the story isn't just price, it's who's buying and why. So let's kick things off with policies. Lower US rates typically reduce the appeal of yield-bearing assets like bonds that often make riskier plays, including crypto, way more attractive. This time, though, the reaction has been muted, and you might ask why. Well, this is because of the fact that markets has already priced in that 25 basis point cut that we got last night. So no surprise, no fireworks. Then we have the real driver here, which has been whales. Now, a whale is a large holder of the specific crypto. In this case, addresses holding 10,000 to 100,000 Ether who have scooped up an additional 1 million Ether since the start of September. That's a huge vote of confidence, suggesting big money sees potential upside, even if retail investors remain cautious. Then we have exchange inflows on Ether, which has dropped sharply from 1.8 million in mid-August to under 800,000 right now. Less Ether hinting exchanges means fewer tokens being prepped for sale, and which is also a bullish undertone. Lastly, having a look at stablecoins, USDT supply on Ethereum has expanded by $11 billion since mid-August. More stablecoins often equal more buying power waiting on the sidelines. Think of it as a trader loading their magazine before firing. Lastly, macros. So cryptos are muted in response to the Fed's cut, showing that the market is still heavily correlated with equities. Bitcoin and Ethereum or even altcoins largely followed the S&P's cautious reaction, highlighting how cryptos is now tied into the broader risk asset narrative. Having a look at the chart, it is currently consolidating around 4,600 with bulls and bears clashing. A hold above this level could trigger another test towards 4,800. However, if support gives way, the 4,300 band and then the 3,900 band becomes key watch zones. Right now, Ethereum is like a runner stretching before a marathon, building up for that next decisive move. Let's finish things off with equities. The Dow ended higher at around 46,150, rising 0.6% even as broader Wall Street traded choppy. And here's what's behind these moves. First off, Powell's call for that 25 basis point move, which he just called a risk management decision. The Fed is signaling that while inflation is still sticky, the bigger threat is a cooling labor market. By cutting now, they are trying to soften any potential downturn before it accelerates. Think of it as carrying an umbrella, okay? Because clouds are forming even if it's not raining yet. And we had Stefan Mirian's dissent for a 50 basis point cut, which highlights a split inside the Fed. Some want to move faster, fearing unemployment could rise sharply. Others prefer caution, worried about reigniting inflation. That internal tug of war filters directly into market volatility. While the Fed expects 2 more cuts this year, traders are already pricing in 2 or 3 beyond that. Markets don't fully buy the soft landing story at this specific stage, which explains why futures bounced, but overall sentiment remained cautious. Talking about caution, growth forecasts are ticking higher to that 1.6% for the year, while inflation is expected to settle at 3%, still above target. Unemployment is projected at 4.5%. So in other words, the US economy is slowing but not collapsing. Hence the Fed's balancing act. Looking at the charts, US 30 has been on a steady climb, up almost 3% in the past month and nearly 10% year on year. Immediate support sits at 45,900 with resistance at 46,200, and a break higher could put 47,000 into focus. For now, the index is walking a fine line, optimistic about Fed support, but wary of the economic backdrop. Tomorrow's focus will shift sharply to the results of today's South African Reserve Bank decision. The question is, will MPCs follow the Fed's lead, or will they hold steady to keep inflation expectations in check? Add in Ethereum's whale activity and the Dow's tug of war and the Fed forecast, and well, the next couple of sessions that are remaining in this week could be even more revealing than the starts of the week. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking on the link in the description to go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.